The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back here. And remember, don't make too much money because Bernie will take it. Man, I was listening to that guy. And I apologize for people out there who are, for somebody like Bernie, I actually believe that he believes everything he's saying. But some of it, in my opinion, is not very American. It's not what this country was built on. Anyway, it was cracking me up this morning listening to him, though. Here we go. One of the things that has happened overnight, we're going to take a look at gold really quick. We're going to take a look at Chesapeake Energy in just a second. We're going to take a look at the Australian dollar and a couple other things. But, one of the things that we always, I told you, little non-directional in gold right now. Put a gun to my head. I was kind of bearish. But 1264, if you look at what has happened this week, let me put our prices up here so we can see them. As we had hit a high this week of 1262, 1263, 1264 is that number on the weekly. We kind of come off of it. So I've been kind of advocating really doing nothing with this. I didn't feel great about going long or going short. And we've almost reached that support area that we talked about. That was the possible buy point. Didn't get in the neighborhood close enough for me. I only reached a low of 1226. That for low is about 1219 rounded off. So, gold I still think could have a little bit of more of a move down here. And then you got an opportunity, I think, to just kind of put a high probability trade on. But right now, still just kind of meandering around. And you've got some shorter term inflection points here on the 240 to pay attention to if you've got to trade this thing, 1229.60 up into 1240.40. But remember, again, I think the powerful inflection points to trade gold off of obviously are the weekly and the daily. And when you drill into the scanner, just to completely get gold out of our hair, we're going to be able to see gold here. You're going to see those inflection points. You're going to see them in the landscape view, plain as day. There's the 29, there's the 40, there's the 18, and there's the 64, right? So right now, when you look at gold and you look at the cell structure, we're just kind of, still arrows up on the weekly and daily. You got to always pay attention to that. And that means that we're in a defined uptrend on both of those time frames. But, just gives you a lot to look at, hopefully puts some things in order for you, and also gives you chances to wait until the market comes to you into some of these inflection points. So that's the way we're looking at it. We always use the lower term time frames to kind of regulate that trade down. One of the things I was looking at in our scanner, and let's just get a peek at what the S&Ps are doing really quick. Really, on the June contract, have really come down into this 1998 unfair high. We're trading about 1999 right now. I'm a little more bearish on the S&Ps than I am bullish. But again, I'm buying this inflection point. We're going to have to wait and see how the market opens. I want to wait and kind of look at the breadth situation. We had the internals kind of roll over a little bit yesterday afternoon near the close. There's the close yesterday. Just started getting a little weaker. I want to see if we can cross into negative territory first. I'm just waiting to see if the market can open and see where the futures lie and where the internals are kind of condensing themselves as far as the short-term breadth. And then we can get some direction on a short-term trading opportunity. But right now, you've got that 1971 sitting there on the June contract. And if the market's going to kind of top out a little bit here, and the short-term breadth changes a little bit. Remember, the long-term breadths are still very, very positive. We're going to pull up the scanner, and we're going to look for some opportunities. One of the things I was looking at, I was saying, well, you know, what's been kind of really still trading below profiles and just kind of getting towards the top of a daily so he can whack its head off. Ralph Lauren, RL, really nice little situation. Let's take a look at it. RL. Here we go. And, you know, weekly getting up into that kind of DMZ between 99 and 101. Why 99? Daily unfair highs around 99. I think we opened this morning 98.57. So, you know, what are you looking for here as a trading opportunity? My opinion, you could explore all the way down into 93.48 if you get some market help. Remember, this particular stock got dumped on pretty hard from about 117, 116 down into 80 and some change, and now we're kind of rallying back up right in the middle of that move down. But we've got a nice little feature here, 99 into 101, and I think your risk reward, and you reached a high yesterday of 100, so we're already kind of in that DMZ coming out. Stops above 101 with targets down below around 93 and some change. I think you got a decent risk reward trade on here with Ralph Lauren. If you can get some market help, that's great. If you don't, I think you play this relatively safe by putting this type of scenario on the board. All right, we're going to take a look at another stock here. Chesapeake Energy. We're gonna save that for crude oil. Let's hit the currencies really quick. Let's just hit the ones that we traditionally look at. The euro, dollar looking. Let's hit the dollar first. Here we go. And let me get the correct month up here. These servers on the charts wheel. Okay, so here's the situation on the dollar. You got 97.74 sitting up there, weekly unfair highs. On the daily, this is the drill. Right in the middle of a fair auction, pretty tight profile here. So we're looking to trade a breakout right now. There's nothing to do. 96.22, 96.98 up top, right smack dab in the middle as it stands right now. That being said, we're going to go into the euro really quick. We're going to look at the long term on the euro. We're going to see that we busted above this 110.43, coming back down into it on our weekly profile, reached a low this week of 110.72. So I've gotten really close to this. I'm not a huge fan of going long the euro. Here's a daily, very similar situation, sitting up top, condensing down to it. Very, very long looking setup here in my opinion, but I'm not a big fan of going long the euro ever, and that's been a very, very good slant to take. But right now it looks like you've got to wait patiently until we get below 110.43 to go short. Right now you've got a decent long looking setup actually. But remember, the dollar's relatively non-directional down here, so we could churn around a little bit on the euro. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We're taking a look at copper really quick. Want to take a look at the Australian dollar, hit a couple of currencies after the euro there. And remember, we only talk about trades that we were right on. Just kidding. We're going to talk about some trades we were wrong on in a little while. 74.40 rounded off. We talked about waiting until this thing came back down to meet us after the breakout. We talked about trading this above 71.69 up into this area. Boom, so be it. It happened. Now we're coming back for the powerful trade. The commodity situation we're going to talk about in general in a little while, but Australian dollar, I like this action. I like this technical setup here. I think you got a decent little trading opportunity, and we've come down pretty hard here. Reached a low of 74.52, gotten really, really close to this 74.39.40. Got the new yellow peel back happening here in the scanner. If you have the scanner, I'm gonna go into the Forex section. And there we go. There's that yellow peel back happening. There's top of the profile sitting there already. Here's the landscape view. Boom, boom, boom. Right there. Boom, boom, boom. Where did I get that from? And we're sitting at the bottom of a profile on our 240. So a lot of things lining up in this general vicinity here. There's that 240 low. There's the weekly high. The weekly high is what I'm mainly, daggone it. You guys see my chart now? Okay. I'm sorry. There's the Australian. When did they go black? Doesn't matter. Anyway, here's Australian dollar. We talked about, okay, hope we're good now. We talked about on the chart, there's the top, there's the bottom, there's the yellow peel back. Got a lot of action here happening around this 74.40 top on the weekly. That's the big number for me, all right? So, again, just to review, got the wrong chart up again. There we go. There's the daily. Here's the weekly. Here's that all-important setup we were looking for, okay? That's the drill in that one. Let's take a look at the yen. wasn't exactly right on this one. I was hoping we'd get more of a move up here. That's what stops are for. 113.72. We talked about, you know, that particular area of concern. Talked about a little bit of a rally in the dollar to try to help that. Chart's gone. Man, what am I doing here? Are the charts back up or are they gone? Yes, no, gone. Okay. Sorry about that, guys. I think when I'm switching servers, it blacks out. Apologize. Canadian dollar, we're going to hit that really quick just to cover the currency mainframe here. You got a daily, you got 132.94. First time in a long time you've had some kind of things being on the same side of the fence. Here's the 240, all right? As we go into the scanner and we look at the, let me just make sure this is the, yeah. Got some green shoots happening here, and you've had them happening for a while. 8 bars on the 60. So as we look at, and let me put this back up here. Sorry to jump around. Again, this is our 240. You've got 133.07 on the 240. You've got 132.94 on the daily sitting here. A little bit of a concentrate, could move north here and retrace up for a while. In fact, stops oriented below that 133 general area. You've got a decent risk reward on your hands on this one. All right, let's take a look at crude while we're talking about the Australian or the Canadian dollar, and then we're going to look at Checkpoint and a couple of the XLE stocks. But let's take a look at crude first. April contract. We had really talked about, you know, trying to, you know, take off all the weight around 38.50, everything that was left on the long crude oil trade that we'd, you know, been in for a while. I took some off at 36.5 and then 38.5. We just said, you know, probably got to be out of this. I think Joey was hoping for this 41.82. But this is how powerful these inflection points are. And that's why it's not a bad idea to try to let these markets come to you sometimes. And here's the daily situation. You've got some interim support around this 35.64 into 36.28. In my opinion, crude oil's made its run. We're going to probably settle back here and just kind of churn around. Canadian dollar could just kind of be a relatively safe trade. I hate to say a safe trade, but it might be something that will just give you some opportunities to trade from one side of the fence, that blocking out the short side and looking at those short-term green shoots as that thing may climb a little bit higher. I think crude oil may find some support here, which would bode well for that Canadian dollar trade. Let's take a look at the XLE really quick. All right, so outperforming crude oil a little bit, still hadn't reached the ultimate mark, 63.74. We're going to take a look at a stock within the XLE. And we're going to go into our ETF heat grid. We're going to choose the XLE. We're going to look at Chesapeake really quick. As you can see, trading above profiles on the weekly and the daily. Had been kind of languishing here. Here's the setup. There's the daily. Let's get our weekly up here. So I'm going to go into my charts here. CHK, E-signal. All right, so this is the weekly, just so we can see this a little bit better. This is the weekly. We've had that ensuing breakout. As you can see, broke stride on the profiles for the first time. We had a little bit of a fake out back in April 2015. That was pretty much squashed immediately. But we've got a breakout and we've got some consolidation here. This is a much different breakout situation than this one, if you can see that. So right now, unfair high is 401 on Chesapeake. Remember, breakout, go back and retest. We could have another move up in CHK. Decent little trade, $4 stock now. Can't believe I'm saying that. But $4 stock, where do you put your stops based on your appetite for risk below this $4 area? We usually put our stops in the automated systems around 25 to 35% of the height of the box. So you kind of take that in consideration. You can do your own math. Okay. We're going to take a look at another stock, Apple, when we come back, and we're going to talk about what the opportunity may be. And we'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Let me know quickly if you guys don't see my charts. Apologize for that earlier. We're going to take a look at a couple of stocks here. We're going to take a look at silver really quick. SIK6, here we go. All right, so another thing, you know, silver on the weekly, that big 1578 area on this contract, and here's the daily 1584. As you can see how that acted against it. and it constantly be showing the relative weakness against gold. Gold comes off, this thing comes unglued. Where's the bottom on this one? I think you just got to pay attention to gold. I think 15,107. If you've got to make a trade, again, that's probably going to be a little bit of support on it if gold bounces at 12.18, 12.19. But again, I don't trade silver. It's just not been the metal du jour. So just a little depressing for longs. Let's take a look at the notes, the 10-year really quick before we keep moving forward. Talked about the possibility of a little retracement back up into 129. I still think that's going to be met bare minimum. Only got about 12, 13 points left on that. Silver's making a pretty serious move down here. Broken some things technically. 129's that close below. Go back and retest. And until we get a weekly close back above 129, this thing's going to be in so-called bear situation. Let's see. MNKD. This is another one I want you to, every once in a while I'll look at stock twits just to see what the flappers are talking about. And every once in a while, you pull up a blast from the past. And, they were yapping about it there. They were yapping about it there. So they yapped about it here. And we've just gotten basically back up into weekly unfair lows at 154. I hate shorting $1 stocks, but don't get too happy until we get back above 154. Something else, SUNE. Sun Edison. I thought it was, it made me think of what was Woody Allen's that thing, Soon Lee. Anyway, here we go. $2 stock. $2 stock, 224 unfair highs on the daily. And that's pretty coincidental with those weekly unfair lows. Again, I'm pulling these up to just make a point that some of these stocks that are getting chatted about on stock twits, don't fall in love with them, no matter what somebody says. You guys know that. Let's take a look at Apple. This is one we were going to hit before we took a break. Reached a high of 104. 104.50 this morning. Those weekly unfair lows are 104. Previous unfair lows 129. Again, this is kind of the maximum area to take a look at Apple hard on the short side. I don't like the way it's compressing up into here and kind of making higher lows on the weekly. I mean, we got away from it. The real decent trade was 2 weeks ago, and we came off a good 4 points. But again, I'm still looking at this as the market may fall off a little bit here and trade sideways at best, I think. In Apple, you've got obviously a chance to orient some stops above 104.29 and trade this from the south side. And it doesn't look like a very difficult trade right now. And the worst thing that can happen is you can get stopped out. But I'm kind of happy to see Apple rally up into this 104 and some change area. Let's take a look at Twitter. You would think that the next thing Mr. Trump would say would be that he's going to issue a free Twitter account for, I guess they're already free, maybe a free handheld with Twitter installed and blah, 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 so everyone can receive his messages. Whatever I just said, forget it. We have reached 1956 daily unfair highs on the daily. The lows are 1485. In my opinion, this thing's going to head lower. The dailies are predicating that. You've got another sell signal at 1761 on this. And remember, 1485 is going to be your targets on the downside on Twitter. Again, delete directly after the show. Clear the hard drive. Let's take a look at Facebook. All right, so this is one, I mean, it just completely, to short this thing at this stage, it's like the Apple. You have to wait until we, we had a couple of hints of a breakdown on Apple. I could pull up the dates, but, they were decent opportunities. Close below, go back and retest. We had a little bit of sell-off here. That took a complete market meltdown for that to happen. But when you're looking at Facebook right now, I mean, this is a stock, you block out the short side on it completely. And right now, it's 108.15 support again. It just, targets up top, 117.59 on this thing. Do not short it. Okay. We're going to take a look at AMD really quick. This was in the scanner. All right, so as we look at this, I had a lot of chatter on Twitter, on StockTwits at the same time. All we've done with this is just rally back up into these weekly unfair highs. That's at around 273. If you've had some longs in this, it was kind of cool because we closed into the balanced area. We came back and retested around 217. Now you've reached your targets. Now you should literally be out of this thing. Okay, so we've reached the long-term inflection points in 2 weeks, and that's the way that ball bounces for Apply Advanced Micro Devices. If anybody's still looking at BlackBerry, same situation. You've reached the targets on the upside. I think this is a short now. Again, 821. Can put stops above that on BlackBerry. Okay. We're going to take a look at this one too. VRX, had a couple of emails about this one. Has it broken down below the lows, and is it time to buy it? Can you nibble on this thing now? Okay, so one of the things that we want to take a look at is we want to get this thing to be able to at least break stride on the dailies. Breakouts above 70.52 on this can be bought, especially a daily close. But again, your targets are 85.88 on VRX. Why? That's the weekly unfair lows, and that's where you should at least take off half your position if all those ifs happen. This morning we're trading 57, so this is not in the cards, and this was a great time to wait and see. 57 pre-market. That's why you wait for breakouts, guys. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Thanks for coming back. We're going to take a look at the indices once again. We're going to take a look at the June contract to the S&Ps, and we're going to reference the scanner, take a look at the breadth situation here daily. Man, the S&P is really top of the heap here on the intermediate. But as we look at this 60, we talked about this thing getting looking a little heavy yesterday afternoon, and I did a pre-market video with Ralph Lauren, and it's on the TFNN site, talked about this slightly. Looking like we might have a little bit of a crossover on the opening here. So, you know, that 1998 on the June contract, it's a big number, 2000. We may just kind of come back and spin around here below 2000 for a while just to do it. It's a big psychological number on top of, you know, looking at the internals, looking a little heavy. So here's where we're at with the June contract. I know you could be looking at that as like, oh, God, we closed above. We come back and retested. I think we've already tried that. I think we probably are going to drift down, but keep your eye on that 60-minute breadth in the scanner. We've already retested 1971. So I just think we're going to kind of spin around here below 2000. I've said that about 20 times already, so it doesn't mean anything. We're going to take a look at we looked at the treasuries, but I wanted to take a look at copper, May copper for a second. Again, you're talking about a kind of a business barometer, if you will, and that's the Australian dollar. Remember, those guys, they dig a hole and sell what's in it. So we had a decent ramp up here. And why I'm looking at the Australian dollar as a possible support around that 74.39 area on the top of the weekly, like we talked about before, is I like this action in copper. I like the way it's holding up. I know Australia doesn't just dig holes and sell copper out of it, but I like the way this thing is kind of doing this type of number, classical technical analysis type pennant flag type wedge situation, and we're staying above weekly profiles. So again, you know, we reached a little bit of a headwind situation. We had looking at our daily, this was kind of our targets here on these consolidations, but right now, that big buy point still around 2015, or excuse me, 2.15 on May copper. All right. We talked about the new crop beam play. John from Philadelphia was just so awesome to point out some of the things going on and this kind of long-term consolidation. And then you've got the transition phase that we're going into at some point. We don't talk about grains a lot. We don't talk about them enough, but this is one of those situations, this profile, just to reiterate here, we've been in force since September 2015. That's a very long time. The longer these profiles are in force, the more violent it is when price action breaks outside of these things. So when you're looking at making a play off of something like this, this is a very ripe scenario still to do that long strangle pretty far out, give yourself some room, let things happen. If we get that oversupply number consistently over and over again, we'll more plantings, blah, 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 a lot of stuff in storage. You could have this thing going to tank here. But that's the time to turn this type of trade into a free trade a lot of times. Sell the profitable side, keep the other one on for free, and go do something else. So thanks for bringing that up, John, from Philadelphia, pointing that out for everyone the other day. I love that trade. We covered crude, some of the usual suspects on the currency world if you guys are joining us late. We're going to take a look at Dow Chemical. Had a couple of emails about this one. This is, something that's really gone pretty hard here. And we're going to pull it up in the scanner. Let's see here. Let me pull it up. DOW. Okay, so, and we will look at Kansas City wheat in about 2 seconds, July Kansas City wheat. So if I can pull it up in e-signal, I hope I can. So Dow Chemical, even though we've had a pretty good run here, now we're flirting around having to deal with some more inflection points up top. This is where we're at. That's where we're in relation to the weekly. We're going to look at our e-signal charts here. I'm expecting a little bit of a market, pullback. And the first time this particular stock can have a pullback to 47.92, I'm looking at this as a buy. I'm not excited just because it closed above yesterday. So I think we can easily pull back to 48.78 and even lower on Dow Chemical. All right, we're going to take a look at, let me see if I can pull it up here correctly. Yeah, we got it. Wow. All right, so we were talking about this the other day, and thanks for bringing it up again. We were hoping that we can get right up into these weekly unfair highs around 497. Let me make sure I see that right. Excuse me, 497.5. So we've gotten there, and what do you do now? Again, all these grains have been in a downtrend. They reach these inflection points. You got to turn the rents the same way until you're told differently. And until we get a weekly close above this 497 area, I'm just not that interested in taking chances on some fundamental news or anything else. This is a technical pattern, and it is what it is. And for guys that are long out there that have caught a good bid breaking out first above this daily 470, you've had a good run. In my opinion, this is the time to start taking some off the table. We're going to take a look at July wheat on the exchange. Very similar situation technically, 489. Excuse me, July wheat. Excuse me. 49, very similar situation to Kansas City wheat. So I'm looking at this as kind of a no trade right now. It's kind of a wait and see. Yeah, without question, a lot of these grains are beat up so bad, any type of scare can just put the fuel on them. But again, we're trading this morning 482, it looks like, on the Chicago wheat. Okay. Get my screen straight here. I'm sorry if you guys are missing my charts. Okay. So again, we looked earlier, we looked for a certain setup. We kind of put this trading below weeklies and reaching top of the profile here. Excuse me, guys. We looked at Ralph Lauren. That was one of the candidates that met this trading below and then just reaching about the farthest it could on the intermediate before we had to kind of put that in a whole nother basket. But let's take a look at some things. Just complete dogs during this run up. This would show some inflection points too here. Alexion Pharmaceuticals. Let's take a look at this one. ALXN. And this is the one you got to take a hard look at. This one, 137.43 unfair lows on the daily, 136.80 on the weekly. We're gonna finish talking about this when we come back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Okay, we're going to take a look at ALXN really quick before we move on to Bed Bath & Beyond. All right, so as you look at this, I'm going to pull a Trump here. Nasty stock. 136.80. This is the weekly. The reason I pulled this up is because we're just pulling up some dogs in the scanner. And the way we were doing that was just doing this number. And I was looking at these because they had ones on both weekly and daily. And of all times, market just heading up this week, just boom, nasty stock, nasty. 136.80, weekly unfair lows. Here's the daily unfair lows, it's 137.43. This stock could really, really take a plunge. I mean, this is the type of thing, hasn't cooperated, showing itself. Nobody wants to own it. If the market pulls back, they could jam this thing pretty hard on the downside. No clapping? Nothing? Silence? Okay. Bed Bath & Beyond. We've got an interesting situation with this one. Tom, jamming, meaning the opposite of jamming, just jamming it. like that. Anyway, BBY. This is a stock that showed up in the scanner. Kind of an interesting situation because we've got this yellow bar appearing within the profile on the daily, and there's a new box attempting to appear within, and we're showing in the scanner that we're sitting right at the bottom of this new profile that's attempting to appear. It's a really weird situation. We don't have that happen in the scanner a lot. But what is that telling me? That tells me that we've got two neighborhoods really sitting there on the inflection point seen around this 33 general area. I'm not a big fan fundamentally of Bed Bath & Beyond. But again, I think you could, again, trade this from the short side below 33.07. I would wait patiently for that to happen. If we get any market help, if we get a market pullback and this thing spins around 33, I think then you've got to identify it as a long. It's moved up with the market, obviously, lately. It's freaked some people out. It's put some shorts in the graveyard that have been short this thing pretty hard. So we've got to wait and see on this. If market pulls back, this thing sits still, it could be a really good long opportunity, actually, because some more people could get squeezed in it. I'm going to start doing the show in Donald Trump lingo the whole time. It's an amazing stock. Amazing. The way we look at this, we're gonna take a look at a couple of picks in the scanner. ICE, this has been on the damnable shame list, I'll call it, and it's not getting off anytime soon. You know, you're looking for inflection points to sell on this thing. You've got one again, 237.69, obviously an expensive stock. But the 240s, again, you're below weekly profiles, you're below daily profiles. And this thing really has seen its better days. All right, it's kind of like Apple. And when the trend is broken on these things, you've got some opportunities for a while. And Apple, very similar situation. I guess, Tom, when they bought eSignal, that just didn't digest very well. If you look at this, I'm just kidding. If you look at this, 251.40 was that selling point, close below, come back and retest. As we look at this, now that it's clarified itself and really gotten technically damaged, you're looking for more inflection points here on ICE. Those haven't been outputted lately on the daily, so as soon as we get something that shows itself on the daily, that's another great opportunity to sell this on an intermediate. In the meantime, you've got these 240s. Stay tuned for Larry. He's next, and all the other hosts on TFNN today. We'll see you tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.